Hey traders, it's Sunday, November 16th. We've got 50-mile-an-hour winds outside, and that's keeping me off the lake. Unfortunately, no fishing for me, but that means that I can get my Sunday video out a lot earlier. So I'm taking a look, trying to find some trades for Monday, trying to get my market bearing. So let's do that right now. We've got the SPY up here along with the major moving averages. You can see we're well above all the major moving averages in that major trend line. So market is bullish. Everything looks good. Monday, a week ago, we had a 150-point S&P rally, but during the course of the day, we saw steady selling pressure, lots of profit taking. Right now, the S&P 500 is trading at a PE of 40. That is super rich by historical standards, and we can expect that Q4 is probably going to be a little bit soft too because we've got the coronavirus really starting to spread. Everything is shutting back down. We've got states talking about going into a complete shutdown again. Not a good situation. Investors seem content hanging on to stocks because they know there aren't really any good investment alternatives. With bond yields at 0%, they're generating negative real returns because they don't even keep up with inflation. So, what else are you going to do with your money? You might as well stay in the market. Plus, there's light at the end of the tunnel. We've got vaccines already coming out right now by Pfizer, Moderna, AstraZeneca. They are both mass producing their vaccines on the notion that they are going to have successful clinical phase 3 trials and that it's going to get instant FDA approval. We had drugs from Eli Lilly coming out that are really going to help in the treatment of the coronavirus and greatly reduce the number of hospitalizations. All of this is really going to come into play over the course of the next 2 months. So finally, I think we can get out from under this dark cloud, this coronavirus, in about 2 months or so. Yes, we've got a soft patch ahead. The election results are still being contested. We've got a runoff in Georgia. That's creating a little bit of uncertainty. There is a really good, strong underlying bid to the market, but there also is selling pressure. There's profit taking when the market gets too far ahead of itself, and that has more to do with valuation. Over the course of the next 2, 3, 4 months, profits will gradually start to come back. Stocks will grow into that current valuation right now, and then the market will have a chance to grind higher. As we kind of tread water and go sideways here, there are going to be some great opportunities for us to sell out of the money bullish put spread. So let me first address that issue because most novice traders, all they want to do is buy calls, buy calls, buy calls, buy calls. You need to have a very strong market tailwind when you buy calls. And the reason for that is that you need more than just the stock itself to continually propel that stock higher because as soon as the stock pauses, time decay becomes a factor. So right now, I am neutral to very slightly bullish just because of seasonality. So I believe that selling out of the money bullish put spreads is going to be the way to go. And that's what I'm going to be looking for. By the way, if you haven't seen my video that I posted to YouTube yesterday, Saturday, please make sure to watch that because I had 5 bullish put spread picks that I put on Wednesday evening. All those stocks are doing really well, but you can go through and see the decision making process and all the check boxes that we have marked for each one of those picks. Every time I mark a checkbox, my probability of success increases. So what I see in the market right now is this breakout right here through horizontal resistance. We're testing this breakout right here. That big bearish would have been engulfing pattern. Pretty bearish, but we recovered the rest of the week. And now we're challenging the middle of that long red candle at 360. If we can close above 360 on the SPY, I think we have a chance to inch higher. Mind you, anytime we get ahead of ourselves, we can expect profit taking. So this is not going to be an off to the races market rally. Trust me on that. So what I want to do first is my favorite trading hour of the week is the last trading hour of Friday. And that's because we do something called option lottery trades. So I'm going to put up my chat room here and we're going to take a look. So in the last hour and a half, we already start looking for these option lottery plays. And the premise behind it is we're going to be buying options that expire Friday, last Friday. So these options only have another 90 minutes of life. We're looking for stocks that have extremely strong momentum and that have a probability of making a good run into the market close on Friday. We buy at the money or slightly out of the money options, call options in this case, for pennies, and we sell them for big gains. But the key to this is making sure that your probability of success is relatively high, because this is a very low risk strategy. Low risk because we're only paying pennies for these options. And if they expire worthless, we're not risking a whole lot. It's a high reward strategy because once the options go in the money, they start trading at parity with the underlying stock, so they can really move. But it's a low probability strategy because you have time decay working against you every single minute. So you've got to really work on those setups. But we have a lot of searches that we use in the chat room to find these trades. And I want to show you a couple of trades that I did Friday. I'd have to probably scroll back a little bit, but I bought some CCL calls. And with the $16 strike price, you can see right here, that was at 14:03, which is 57 minutes before the close. I bought the CCL $16 lottery calls for 11 cents. We'll take a look at that stock, and then we'll take a look at another one, NIO. I bought the NIO $44 calls at 30 cents, and that was about 45 minutes before the close. And you can see where I'm offering the first batch. When I get into these lottery trades, because these options are so volatile and because they are going to be expiring in minutes, my goal, if I bought them at 30 cents, I offer half of the position at 60 cents. What happens if I get filled at 60 cents is now I have a free trade. I've already covered the expense for that trade. Anything I can get for the other half of the position is pure profit. So I'm going to continue to scroll down, and then you'll be able to see how I'm exiting that trade. So there I hit my 100% target. And then I sold some more, a quarter of the remaining position for $1.20 right there. And then I sold the remainder for a little bit more than 90 cents. That was a 200% winner in less than 45 minutes. And CCL also performed for me. I made 40% on those calls. So we'll take a quick look at both of these trades, see how they set up, and see how I was able to identify them. And excuse the last bar right now, we're in the weekend hours, so everything is updating. This was a nasty, nasty bar. Everybody's been trading NIO. We have been making a killing on this stock in the chat room pretty much every day. And you can see how the stock gapped all the way up to 52.50 on the open, and then it spent the rest of the day selling off and selling off hard. This was a gigantic red engulfing candle. Now, I still think there's some selling pressure coming up on NIO. They're going to be announcing earnings this week, so a lot of volatility. Let's go into that 5-minute chart. We had a lot of traders shorting this in the chat room last Friday, and you can see how the stock is down, down, down. Now, this is a steep move. So what I did was I set an alert line, and I saw a nice trend line. When you draw trend lines, the more points that you can draw through that trend line, the more significant it is. So I'm going to click on my trend tool. I would have clicked on alert if I were placing this during the day, and I'd have drawn it right down through there. And I can't place that line right now because we're already through those points, but you can see where it comes into play right there. So I get my pop-up alert, and you can also draw another trend line, a little bit steeper one, but it comes down more like this. And you can see how well that line tracked the stock with a couple of extra points in there as well. In fact, I'm pretty sure this is the line that I had drawn. I get an alert right in here that, hey, NIO has started to move higher. Now, this stock has been so widely followed. It's everywhere. I know there are tons of retail traders who are in and out of this stock constantly. As a super hot stock that sold off that far, once I saw that this downward sloping trend line was breached, I got interested. And we'll put up the 1OSI indicator. This shows us relative strength. So I was waiting for the stock to gain some strength relative to the overall market. Once the stock got above the zero line, you can see 10SI greater than zero, it's starting to pick up market strength. And that was right in here, like I said, about 45 minutes before the close of trading on Friday. So the stock was at about $42.50, and that's when I was able to buy those calls for 30 cents. Those are the $44 calls. Well, holy cow, Pete, the stock is at $43. It's $1 out of the money, and you're paying 30 cents for options that are so far out of the money. Yes, but this stock moves. Look at how far it moved already. It went from $54 all the way down to $40. That is a $14 move. Do you think that if it bounces, that it could have a $5 or $6 bounce? The answer to that for me was yes, absolutely. And especially with earnings season coming up this next week, I thought there would still be a lot of people wanting to get into the stock. So to me, I had this relative strength working in my favor. I had this downward sloping trend line working in my favor. If I click the buy sell signals from our proprietary system, you can see a buy signal there. So I had lots of things working in my favor. Well, I bought them for 30 cents, and you can see that the stock ultimately went up to about $45 at one point. I wasn't going to hang out on it quite that long. I took my gains. I made a 200% profit on it. So I bought those options for 30 cents. On average, I sold them for more than 90 cents. That's what we do on Fridays. Let's take a look at CCL because that's set up well also. CCL, I get into that trade right here at about an hour before the close, and you can see how the stock is right at $16. You can also see that this stock has moved from $15 up to about $16.10, $16.20. So it's had a nice $1 range during the course of the day. And the 1OSI indicator is showing me that this stock is strong relative to the market. Now I can also overlay the SPY, and that's easier for some people to see it, but you can see how the market right here is starting to gain a little bit of momentum, and here comes the stock starting to inch its way higher. I felt that it had an easy chance of getting up to that $16.20 level right there. Well, that would be a double if I bought those options for 11 cents. Well, the market performed well, and you can see how the SPY ran up, but these options just never quite caught on. But they were at least worth 13 cents. They had a little bit of time premium in them. So I bought them for 11 cents. I was able to sell them for 15 cents on average. So I made decent money on that trade. Nothing like NIO, but still pretty decent trade. So those are option lottery trades. I suggest that you take a look at my videos that I have on my YouTube channel. You can learn more about them. I also have some videos on my website in the tutorial area so you can learn more about these quick plays. It's really the only time that I buy options during the day is in the last hour of trading on Fridays. I find that the bid-ask spreads on options are too wide for me, and if I'm trading stock, I can be in and out. I really like to trade stock when I'm day trading because I can buy bids. I can sell asks when I'm trading stock. If I'm trading options, I'm almost always trading against a market maker, and I can't buy bids and I can't sell asks. And that slippage between the bid-ask spread is oftentimes too wide. So that's how I trade options. Friday in the last hour of trading, I'm looking for very heavy volume. I'm looking for stocks that have broken out. I'm looking for a strong ADX. All of these criteria are searchable in Option Stalker. And so we use shorter term time frames when we do that. Which, by the way, now we're going to switch gears. Now we're going to focus on what's happening Monday. Let's see if we can find some stocks that set up well for swing trading. I'm going to remove some of these indicators on the chart just to clean it up a little bit, and then we'll be able to take a really nice clean look. So here's a search that I ran, and pretty basic. Relative strength is critically important to everything that I do when I trade. I want to see stocks that are leading the market higher. I want to see stocks that are leading the market lower. My first focus is on market direction. What is the market going to be doing? Once I have my market direction and my market opinion, then I find the best stocks. Once I've found the best stocks, you could trade almost any strategy that you want if you get the first two pieces of this equation right, the market and the stock. You can almost trade any option strategy you want and make money. Yes, you could buy calls. Yes, you could sell at the money options. You could do pretty much anything, but you have to get the first two pieces of the equation right. And that's why I spend an incredible amount of time teaching those two pieces. So if you're a young trader just starting out, please start there. Do not worry about trading options. It doesn't matter. Get the market right, get the stock right. So I'm coming into option stalker and using the custom search. And here are the criteria that I like to use when I'm looking for trades. I want to make sure that I've got good option liquidity. So I'm going to use a value of 0 to 15. This is a proprietary calculation that we run. And I want to make sure that earnings are out of the way. I don't want to be taking a position, a swing trading position, where I'm going to be tripping over myself because, here come earnings 2 days later. Now I've got to exit the position. I do not hold over earnings. I'll trade before earnings, I'll trade after earnings, but I do not hold over the number. It's a crapshoot. So I want to make sure that earnings have already passed by. So my earnings start date would be October 1. The end date was last Friday. Actually, it's today. It's November 15th. So I don't have to worry about earnings. I also want to make sure that the stock had some heavy volume last Friday. Volume is always a good sign that whatever momentum the stock currently has is going to continue because buyers are in there. Now, I also want to make sure that I've got relative strength, and I could use a daily basis, so it's strong relative to the market on a daily basis, on a 4-hour basis, on a 2-hour basis, and I'm going to mark on a 1-hour basis too. This tells me that this stock has a really strong head of steam relative to the market. Perfect. I'm going to click scan, and these are the results that come up. These are the stocks that we're going to focus on today. We're going to find a trade out of one of these. So I'm going to move this off to the side, and let's start clicking through and see what we've got. CELH. Let's start with the daily chart. Whenever I'm day trading, I always go to the daily chart first because when I day trade, I want to make sure that if I get trapped in a position and I have to hang on to it for a little bit, I like it on a daily basis. If I want to, I could even swing the position overnight. So I always start with a daily chart. When I'm swing trading, you have to start with a daily chart. You've got to get the macro viewpoint first before you start to drill down. So CELH, beautiful compression in here. The longer and tighter the compression, the bigger and more sustained the breakout. This one's been going on for a few months. I love this. And you can see the massive volume that came in. We've got a gorgeous breakout here through horizontal resistance at 25.50. There's the earnings before the open. So earnings come out, the stock opens here and just climbs the entire day. What did it do Friday? Well, it pulled back a little bit, but it held the midpoint of this long green candle. That's bullish. And look at it close on the high. So we can bring up the 5-minute chart. Now, before I do that, when I see a daily chart like this, I'm going to hope that any pullback happened early in the day and that it spent the rest of the day grinding higher. So let's see what it did. So early in the day, you put in your lows and then yes, kind of blew off, pulled back, but then yes, really nice grind late in the day. I believe this stock is going to continue to move higher, but the stock is currently at 32.50. I'm not familiar with this company, by the way. So I had to click into the stock ER and then I went down to view press release. Well, this is their earnings release. And you can see that they make some kind of beverage. It's some type of energy drink. I'm not familiar with the company. I don't really care who they are or what they do, but I was curious. You can see that they had 95% revenue growth year over year. Okay, well, that would explain why it's up so much. So I'm going to go back to the chart and I'm going to look for a trade. I'm going to look for an option trade, but my suspicion is that I'm probably going to be day trading this stock on Monday and not doing an option trade on it because it's run so far. It's gone from $25 up to $32.58. Could be getting a little bit stretched. If I were going to sell an option, I could look at that point and that opening right there, which is 27.50. So I'd have to sell an option at $27.50. It only has monthly options, so not a lot to choose from, and it doesn't even have a 27.50 put. Bummer, because I probably would have traded that. So let's go out into December and see what we've got in December. Now those could get listed this week, so there may be more options available to us come Monday. In fact, I would expect that, especially with the stock making a move like that. So here we can see that we've got the $25 puts are 35-cent bid offered at 75 cents, and that puts me right down here. So I'm going to shift gears just for a second because I want to tell you about a really good strategy that you can take advantage of. It's called naked put writing. If you're an investor, if you're a longer term swing trader, here's the strategy. So let's assume that I sell this $25 put. I have to put up 20% of the strike price. So in this case, it'd be $5. So I put up $5 for that trade. If I can bring in 50 cents for this naked put, that means that I'm making a 10% return over the course of the next 4 weeks. Let's call it 5 weeks. So 5 weeks, I get to make a 10% return. Well, let's take a look at the risk of this trade. 10% in 5 weeks is not anything to scoff at. That's a really nice return. Where does that put me? So if I come down here and I look at 25.50 is kind of the breakout level right here, I'm below it. In fact, 24.50 would be my entry price on that stock if I get assigned, because I have to buy the stock at $25 via put assignment, but I collected 50 cents in premium. $25 minus 50 cents is $24.50. So if somebody came up to you on the street and said, "Hey, I want you to look at this chart right here. This company just announced earnings and their revenues were up 95% year over year, but the stock ran up to 32.50. If I gave you a chance to buy that stock back here before it even broke out, before it announced those spectacular earnings, would you do it?" Well, heck yeah, I would. Okay. And what if you weren't able to buy it at that price right there? What if I gave you a consolation prize of 10%? Would that interest you? Of course it would. That's the mindset that you need to be in when you sell naked puts. That's a fantastic trade. 10% on that one, I would take it. And I think that you might be able to get 50 cents because that bid ask spread is fairly wide. I think you're going to see that price there, and I think you'll be able to work the middle of that trade. Now, I wouldn't do a spread on this, and that's the question that always comes up. Well, why don't you buy a farther out of the money put, Pete, and reduce your margin requirement, increase your profitability, your profit percentage, because the options aren't that liquid. Plain and simple. Why mess with two strikes when I can just use one very simple method? So I like that trade. I like it a lot. Let's go to the next one and see what we've got. So I'm going to go through all these. I'll tell you why I like the stock or why I don't like the stock. When I use custom search, I always want to cast a very wide net. I want to get lots and lots of candidates, and then I want to keep adding checkboxes here because every checkbox that I add increases my probability of success because the search is more and more restrictive. It has to meet more criteria. So we're going to go into COM, and here we can see a really choppy stock. Okay, drops here, chop, chop, chop. I don't have a lot of interest in this at all for doing anything with it. If I did some technical analysis, I kind of like to break out through this downward slope. No interest. Got to move on. EB. This I kind of like. I like the fact that you've got a breakout below this downward sloping trend line right here. We're above the 100-day, 200-day, 50-day moving averages. So the stock announces earnings and it breaks out to a new relative high. Whenever you break out to a new relative high, it's going to be challenged. And these gaps are also challenged. So you've got test, bounce, long tails under body. That tells me that every time the stock tried to fill this gap here, buyers came in. Boom, boom, boom. They're lining up. Friday, we had a bullish market day, and we get through that high right there, and we close on the high of the day. EB wants to go. It wants to move higher. And look at the volume. Excellent. Yes, this is nice. 1404 is where the stock closed on Friday. So let's take a look at the option chain. Look at there. Only have monthlies on it. Okay, well, let's see if there's a trade. Now, I'd like to be able to sell something below this 1280 level. A 1250 put right would be fantastic if I had it available to me, but you're not going to get much for it because the stock is already up at 1404. So let's take a look at the 1250 puts. You can see they're 15 cents bid, offered at 20 cents. Wait a minute. Let's figure out what this return would be. November 20th is this Friday. So let's take a look at this calculation. All right, 1250. So I'd have to put up on this particular trade $2.50 if I sold that put. Okay, so $2.50. I collect 15 cents of premium in for it if I sell those puts naked. Well, that's a 5% return in a week. That's not too bad. 15 cents divided by $2.50. Run the numbers on it. It'll be about a 5% return. It'll actually be a little bit more than 5%. Maybe it's 7%. A 7% return in a week. That's good money with a very high probability of success because look, we're one standard deviation away from where the stock normally trades. And look at this support right at that 1250 level. And look at that strength to a new high. Do you think this stock is going to continue to drift higher next week? I do. Really nice breakout, held the breakout, tested it 3 times, new high on Friday. Yes. So I think the stock's going to continue to go higher, but if you're looking for a pretty dang easy way to make 5% a week, you go out and sell that 1250 put for 15 cents. And if you're assigned, you're going to own the stock for $12.35 right there. Okay, not a bad play. Let's see if we got anything else working on this one. Now the stock's got a full head of steam here. I do want to go in and I want to see what this company does. I'm not familiar with it. And you can see that they're a platform for live events. Sounds kind of like Zoom as far as what I can see. And I'm just trying to take a look and see what they're doing here. I'm not seeing anything. I'm not going to waste time going through the fundamentals too much. We're going to take a look and we're going to see what options we might have available. So let's assume that the stock after this breakout is going to continue to grind higher. I will be watching it to see if there's a play on Monday from a day trading standpoint. So if I were going to sell the $15 puts and buy the 1250 puts, I could do that for better than $1. And that means that I would be bringing in $1.05 and risking $1.20 because there's excuse me, I'm bringing in $1.05 and I'm risking $1.45 because there's $2.50 between the strike prices right here. So I better have a dang solid opinion that this stock is going to continue to grind higher and that it's going to get above $15. If it does, I'm going to be handsomely rewarded on that trade, and I'll probably have about an 80% return on it if that trade works out. Pete, why would you sell a credit spread instead of buying a debit spread? Why wouldn't you buy the 12.50 calls and sell the $15 calls? That's an equivalent position, by the way. If I buy the 12.50s and sell the 15 calls, that is an equivalent position to selling the $15 puts and buying the 12.50 puts. The reason that I would prefer to sell the puts is because as the stock continues to move higher, these options get cheaper and cheaper, and then I can start bidding for the $15 puts, especially if they go down to 10 cents, 15 cents, I can be bidding for them. Where if I'm trying to leg out of this debit spread, I've got to get out of both sides of it, and it's going to be harder for me to do that because these options are going to be going up in price. And you can see $1.60 bid offered at $1.80. They start to really widen out. So when you get nice cheap options, then you've got penny bid ask spreads. So that's why I prefer to do debit spreads. Would I go out on this stock and maybe buy a December call spread? I could take a look at it. I'd have to be very confident that this stock was going to continue to move higher. I don't know that it's going to do that, but you could take a look at buying the 15, 17.50 bullish call spread. And right now you can see that that spread is 50 cents bid offered at 70 cents. If you could buy it for 60 cents, you would need to see immediate movement higher. So if you did this trade, the key for me, would I want to see the market move a little bit higher next week, and I would want to see it above 360 on the SPY, and I would want to see this stock with nice relative strength ticking higher. If I had those components, then maybe I would. So that's another trade that you can consider. That's the evaluation process that I go through with each one of these trades. Let's see what else we got. IGT. One more thing on EB that I wanted to show you, and one reason that I do kind of like that debit spread is this is a zoomed in view. Let's zoom out. Ah, that's pretty nice because we've got a cup and handle formation here with a breakout above that lip. So I do like that. The stock has been a high flyer previously. It ran into some trouble. So yeah, this stock has the potential to go higher. Anyway, let's go on to the next pick. We'll go back to the normal view and we'll take a look at IGT. Very choppy stock. You can see it's been all over the board. No real pace, no momentum. Yes, it is through the 100-day. It's through the 50-day, just about through the 50-day. I'd have to try and sell something down here at the 200-day, which would be at $9.50. We could take a look at those options, but I don't think there's going to be anything in them. So LVS will go down to the 950 puts. Probably have to even go to the $10 strike price because I don't think they've got increments like that. Whoops, sorry. I think I'm still on, oops, I put the wrong symbol in. That's what it is. I went to LVS instead of IGT. All right, here we go. Yes, we're back into only monthly options, and we're not going to get any premium down here at the $9 strike. Even at the $10 strike, we're not getting a whole lot. Plus, it's very close to the money. If I went out into December, can I get anything? And we'll take a look there. I don't think so. You can get 20 cents for that. This is a pass. I just don't see anything. There's no rhythm or pace in it. So I could have told you that right out of the gate and kind of foregone the analysis part to it. There's nothing here either. I don't like that. I like breakouts. I like big moves. And that also makes your process a lot faster, like this stock. So this stock has had a really nice upward sloping trend line. We have a nice little trough in here with a breakout right there after earnings. So the stock takes off on that earnings announcement. We get this huge spike up on that 150-point S&P move. And like all stocks, it spends the day pulling back. And then this whole breakout here from the earnings was checked the following day. So a lot of downward momentum here, follow through here, but the stock finds buyers, and now that breakout right there has been confirmed, and we have a bullish hammer. So we spend a couple days sideways, and Friday, the true colors start coming out. The stock wants to move higher. Really nice volume there. We've got resistance at 1250, now becomes support. We have the midway point of that long green candle, $12.50. If I could get anything there, I would like it, but I don't think I'm going to get any premium there. Let's see. LTHM, by the way, lithium, they are in the battery space. So with all the interest in green stocks right now, that's fueling this stock. So we're going to take a look and see what we can get here. 1250 puts, nothing going, not a lot of premium there. Stock is at $14.23. And if we feel that this stock is going to continue to go higher, yes, you could sell that $15 put and you could buy the $12.50 put for probably a $1 credit, but you'd have to have a lot of confidence. This stock is only 70 cents from getting to 15. You'd have to have a lot of confidence that in the next week the stock can get up there. So we'll take a look at December, see if there's a trade for us there. And in December, if we go down to that 1250 put, just like we did in the other candidate, we've got to put up $5 in margin. Excuse me, $2.50 on margin on this one. And we could get 50 cents for that. That's a nice return. That's a really nice return in the course of a month. So if you like this stock and you want to get in at $12.50, right there, where that breakout is, that's the put that you would want to sell. And your net cost on it would actually be $12, which is right where that earnings announcement came out, right there. So I think you got to be a little bit careful with these green energy stocks because there's a lot of fluff in them. There's a lot of excitement over them right now. So there's money flowing into them. There's retail interest in them, but the earnings may not necessarily be there. So make sure you read that earnings report and find out what's actually happening with the company. But from a probability standpoint, you can see we're one standard deviation out. That's good, and you're getting a really nice premium for it. So in this particular case, on that naked put right, you'd be making closer to a 20% return on that trade by selling that naked put because you've only got to put up $2.50 and you're getting 50 cents for that. So really nice return on that one. Risk and reward always go hand in hand. So I like that though. I think that's a nice looking trade. MGI, I highlighted this, I believe, a week ago. I only had 2 stocks that came up in my search. I know MGI was one of them, and I saw this breakout. Whoa, this stock really wants to go. It's MoneyGram. So too far out of the gate. Good possibility I'll be day trading it tomorrow, Monday. Well, why would I just be day trading it? Because that train has left the station. I can be in, I can be out, I can evaluate it on a daily basis, but when I'm swing trading, I don't want to have to micromanage the position. I want to be able to have it on, I want to have it do its own thing and not have to watch every tick on it. That's the type of stock after that kind of run that I would have to watch it all the time. And I don't want to babysit my swing trades. I want to put them on and I want to let time decay work its magic. So I like this one, MGM. Got this nice horizontal resistance here. Actually, you can even go back here. 1, 2, 3, 4, 5, 6, almost a 7th point. Now we get that breakout right in there. There's your earnings reaction, pretty positive. Big breakout here. Vaccine, good news for retail, stocks, travel, and entertainment because it means that eventually consumers will start getting their lives back to normal. So, MGM casino stock, I like that check right in there. It pulls back. That's Monday's action. We get a little follow through selling in here. We test that breakout, bullish hammer, and then zoom off to the races. So, yes, I do like MGM. And in this particular case, I think you can try and sell right around that $24 strike price. that's where I would be looking to sell a bullish put spread. So that's what we're going to do. We're going to go in and take a look at the MGMs. And we'll go a couple weeks out, see if we can get any premium there. We may have to go a little bit further out than that. So I've sold the 24 put and I buy the $23 put, and I can see that that spread is currently 17 cents bid, offered at 30 cents. I need to get 20 cents for that spread. If I get 20 cents for it and there's a dollar between the strike prices, I have to put up $1 in margin, but I get to use the 20 cents to apply it. So I only have to put up 80 cents. 20 cents divided by 80 cents is a 25% return in the course of 6 weeks, 5 weeks. That's a really good return in my opinion. And I feel that this stock has a chance to continue to move higher. And that is our short strike price right in there. So I like this trade. You can see that it has really good support right there, and I'm expecting that support to hold. So yes, that's a viable trade. Again, recapping, that was the December 4th expiration. I told you there were 5 weeks in this trade. Actually, this is only a 3-week trade. If you wanted to play it a little bit safer and go all the way down to this 50-day moving average, then you could start looking at, and we'll just look up, and that's at $22. So there we would have to sell the $22 put and buy the 21. And let's see what we can get for that. 22, 21, and there you can see you're not going to be getting that credit even if you go out further in time. No, I didn't adjust that. I'm sorry. I've got to adjust the time on that and go out to December 18th. That's what will make a big difference. So now, if I click the 22.21, there you can see 11 cents bid offered at 21 cents. I might even be able to squeeze 15 cents out of this one, and you'll be going all the way down to that $22 strike price. So you'll have multiple support. You've got this support line right here coming into play, that support right there. You've also got the 50-day moving average that will be support. That's a much higher probability trade. And you can also see on the option chain that you've got 2 standard deviations out of the money, which greatly increases your odds of success. So this is a trade where you could probably make about almost 30% on that trade. So let's assume that you don't just get a 20-cent credit, that you're able to get a little bit more for it. So need to get 20 cents on this one though. It's 11 cents bid, offered at 21 cents. You need to get a 20-cent credit on that one. But you're so far out of the money, I would give that a shot. If you've got any kind of pullback in MGM, even of 40 cents or so, you're going to get filled on that spread. I'm pretty confident in it. mRNA, we've only got a couple more to knock through, and I'm not going to spend a lot of time on them. mRNA, here you've got a really nice breakout. They're in phase 3 clinical trials. They've got something similar to what Pfizer has already released. I think that news is baked into the market that their drug is going to be as successful because it uses the same premise. And you can see how the stock's been moving higher. It's a biotech. Pfizer didn't have that great a reaction to the news. You can see how it gapped up on its news that its vaccine was 90% effective, and then it spent the rest of the time pulling back. I think mRNA, I'm hoping it's not, but I think it could be a sell the news type of event. So I would avoid that one. Don't want to be messing around with that. And we've only got 2 more. And PCG, you can see that stock has a nice breakout here through the 200-day moving average. That looks pretty good. And it's a utility company, which utilities don't typically move very much, so we're going to avoid that one. TCO looks nice here. It's up against that 200-day moving average, but it's got to break through this resistance level before I want to consider it. It's got to get above that 200-day moving average. Will it do so? It might possibly. So what I would do is just take GTC. I would click on that high from Friday, and now I'm going to get an alert if the stock actually does go through. I'm sorry that this was a little bit lengthy, but I feel it's super important for me to go through each one of the candidates and to show you what I'm looking at from a technical standpoint, why I like some stocks, why I don't like other stocks, how would I set the trade up? How does that make sense? And how does that trade fit within the context of the overall market? Again, my market bias is neutral to slightly bullish. That means I can't get super aggressive with my trades. I can't be out there buying calls on these stocks because I don't have a market tailwind to help me. So I've got to be looking for stocks that have had high volume, relative strength, breakouts through technical resistance, and then I'm selling those bullish put spreads below technical support. I'm trying to get a standard deviation or two out of the money. That increases my odds for success. I'm showing you some really nice naked put rights that you can do right now while the market kind of moves sideways. I've also shown you a few bullish put spreads. I hope you like the content. If you do, please give it a thumbs up. Make sure to subscribe to my YouTube channel so that you never miss one of these videos. I do them daily. I've got great trade ideas for you in all the videos, and everything that you see here, I was using, using Option Stalker Pro to find these candidates and using the custom search engine that we have as well. And we also have a ton of great proprietary searches that we use during the day and for swing trading. So take the free 2-week trial. Thanks again. Good luck with your trading Monday. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.